Good morning for those of you in Europe and good afternoon for those in China. I'm Robert Gors from the Benelux Chamber of Commerce, one of the implementing partners of the EU SME Centre project. Today's topic is access to equity financing for China-based SMEs, different options from seed financing to listing. The EU SME Centre project is a project funded by the EU European Union, assisting SMEs to do business in China by providing a comprehensive range of hands-on information, advice, trainings, and other supporting services. The centre is implemented by a consortium of 6 partners, and BenCham is one of the partners who organized the webinar today. Before we start the webinar today, I would like to remind you that you can post questions or send us your comments during the webinar through the question panel on the left side of your screen. Our speaker today will try to answer the questions as we go along during the Q&A session at the end. In case your question is not addressed by the end of the webinar, I would recommend you to register on the EU SME Centre website and use the Ask the Expert service. Our coordinator will soon send you a link to the website through the panel. Today's speaker, Christine Lambert. Christine Lambert is founding partner of the Asian part of Invest Security, a leading French investment bank and stockbroker. She joined the firm in 2008 to source Chinese middle market clients looking for PE and VC fundraising. Prior to joining Invest Securities, Ms. Lambert served as finance analyst at the Euronext Paris. Until 2001, she played a leading role in more than 80 IPOs. She's been over 8 years in China, and therefore we believe she is one of the best persons to talk on this topic. Before I hand the mic over to Christina, I would like to launch a quick poll to the people attending, because this shows us a little bit what kind of people are attending, and it's an interesting information for our side. I see that many of you have already voted. Please, for the people who have not voted, please cast your votes, and then we can close this poll. Currently today we have multiple, the biggest part of the companies is more than 5 years of age. I would like now to also launch the second poll. And please ask everybody to answer the question on the screen. Are you an SME, or can you consider yourself a startup, SME, or others? As we see, the biggest part of today's visitors to the webinar are consider themselves as SMEs. Christina, do you have any comments on this?
First of all, thanks for your introduction, Robert. So it's really my pleasure to share my experience with you today. And Just maybe a first feedback on the polls, which is quite interesting because in fact on the attendees, 75% say their company is more than 5 years old. And at the same time, we have 50% which are SMEs. So in fact, that means that really the companies that are attending today are companies with more than 5 years old. I mean, with R&D, with a lot of R&D, and already with not really a startup, but with growth at a growth stage. So it will be. I will try to adapt my comments as well, knowing that the attendees. So let's have a look at the context for why is there a lack of SME funding for you companies in China. We know that SMEs have little or limited access to capital markets in China. We know as well that SMEs are not the first choice for the banks. Less than 20% are for SMEs. Most of them, they like to favor SOEs because, of course, the SMEs seems to be too risky, too small, too early stage, whatever. We also know that SMEs have higher non-performing loans versus corporate lending. It's, of course, linked to the risk profiles of the SMEs. And also, as an SME, of course, you rely more on internal kind of financing, some internal cash. So why is it complicated to get access to financing? Of course, there is a lack of credit risk assessment systems. These, especially in China, are really not adapted to SMEs. So there is also a problem with information, in fact, that the SMEs is able to provide versus what the bank is looking for. And of course, SMEs don't have the proper corporate governance that maybe some larger corporates have. I nevertheless would like to insist on the fact that the SMEs in China have a substantial contribution. In number, 99% of the companies are SMEs. 50% of the output is coming from SMEs. 60% of the export is also SME. SMEs are providing 30% of the whole taxes and 70% of the jobs. So we absolutely need to find some solution to unlock financing for SMEs. Because without this funding, we have no growth. The SMEs will stop their investment plans. They will stop transforming ideas into reality. They will stop innovation. So we crucially need this funding. Especially with the credit crunch and the crisis, banks are more and more reluctant to play their role as provider of liquidity and supporting investment in the real economy. So in Europe, SMEs rely more on bank loans than the American counterparts, if we look at Silicon Valley, for instance. But let's have a look just now, what are the different equity options that we offer, that can be offered to SMEs. I know that, let's say, 25% of the attendees are startups, so maybe you can ask yourself these questions is, how can I finance, in fact, the assessment of an initial concept or a new product development if I don't have enough cash or have no access to loans because of my risk profiles? So, in fact, the answer is risk capital. This is really what finances innovation and fast-growing SMEs. There are different equity financing options depending on the development stage. For each development stage, you have specific investors for certain amounts of funding with some specific requirements. So the first question you need to ask, that's why I ask you, the age of your company, it's what is your development stage? Are you, let's say, less than 1 year old, so you are very early stage? You have no revenues yet, and of course, no reason to be break-even. Or you are early stage, between 1 and 2 years old. You have revenues less than 1 million euros, and you are not break-even yet. Or what we call later stage, between 2 and 5 years, which is majority of the attendees today. You have between 3 and 5 million euros, and you start to be break-even. And then you have the IPO stage, and in most of the case, the companies are between 3 and 5 years old, depends on their growth speed, and they have more than 5 million euros for let's say, for alternate listing on the Euronext Stock Exchange, and you are break-even. So depending on which stage you are, you can look, in fact, for some specific investors. So let's say when you are a very early stage company, you can look for pre-seed or seed kind of financing. It's most of the case, let's say, family offices or friends and family business angels for seed capital, sometimes also some crowdfunding. And you can find between 20 and 100,000 euros. And the goal of this fundraising is mainly to study and assess and develop, let's say, an initial concept. If you are early stage, so you can consider yourself as a startup, you can look for venture capital like IDG, Ketone, or Innovation Work, and they can provide you between 200,000 and 1 million euros. And this enables you to do some product development and some initial marketing. If you are later stage, you can look for emerging and growth stage funds, for instance, more private equity like 3i or CVC or Fountain Invest. They can provide you with more than 2 million euros or much more. And this can help you to expand your company, enter new markets, and grow faster. Then you have the later stage, it's really IPO stage with a growth stage. And then you target some asset managers or family offices or other funds. And you raise minimum 2.5 million euros to get listed. And then you can have, let's say, the exit of some first investors, let's say some VC funds that came in at the early stage, let's say 2 or 3 years before. And then you can access to some other kind of investors like asset managers, for instance. So to be very informative, let's have a look to what are the information required by these equity investors. First of all, you need to prepare a corporate presentation with a brief description of your activity, who is the management, very important, what is their background, their sector focus, their experience. Then you need really to do an exercise internally about what's your strategy for the next 3 years. It's really the homework you need to do. The management needs to sit around the table and really brainstorm on what we are going to do for the next 3 years. Then you need to have some ideas about what's the resources you need, the number of employees, and also key questions. What is really your market you are going to target, and who are your competitors? And then, of course, you need, once you have done this exercise, you need to have an idea about your key financial indicators, which kind of legal structure you will have in China. This is always a key question of investors. Do you have a Hong Kong holding or BVI or Cayman, whatever? And then if you want to raise funds, how much you want to raise and how you're going to use this cash, of course. Second part in this presentation is the business plan, very important. And then you need to describe your assumptions on the revenues, the expenses, the cash flow statement, and ideally with 3 kind of assumptions, the cautious ones, realistic ones, and optimistic ones. And then you need to explain your business model, how you are going to generate revenues, let's say what is your price model, and how you are going to generate profit. So you need to give some forecasts for the current year, and let's say 2 additional years. And then third part is a financial statement, the historical financial statements, ideally audited if you can afford it, and then with a profit and loss account, a balance sheet, and a cash flow statement. And the cash flow statement needs to be very clear to really evaluate the amount of cash you need for the next 18 months. Let's say if you want to calibrate your increase in capital, how much the investors need to put in your company, you have to calculate it for the next 12 to 18 months minimum. So in fact, you need to prepare a brief introduction in order to start the marketing of your company. It's really marketing. And the amount of financing should cover the needs for the next 12 to 18 months, as I mentioned before. So how do equity investors think? I think you need to try to put yourself in the skin of some investors that you will have in front of you, to be really prepared. That is also an exercise InvestSecurity is doing with its clients. You need to be able to answer the following questions: is how unique is really your company? Is your company, is there some scarcity on your company? Are you positioned, let's say, on a very fast growing market? What differentiates yourself from competitors? For instance, I'm currently working on an airplane company. Their airplanes are much more performance than their competitors, like an American competitor, on different kind of items, and so the technical performance are better. So that is something you need to demonstrate. Are there some barrier to entry, like intellectual property? Also very important. Do you have some patents? Do you have some know-how? Do you have a brand? You need also to elaborate on this. What will enable the company to attract better talents? Which kind of retention plans do you have internally? And what will make the company gain more clients than competitors? For instance, if you have some very good customers that really can promote some prescription for other potential clients, that is also very important. Second point is credibility. So how much can I trust the company and the CEO? We have some philosophy inside Invest Securities to be very transparent on the history of the company. How does the company started? How does the team meet? What happens, in fact, since the inception of the company, and also even explain the failure, because in fact, with the failure is also track record for the companies, always some achievements. You need to be very transparent. So as a manager, you also need to explain your own background and your own values. That is key for the investor. It also creates like a bond between you and the investor, which is also very important. So the question the investor will ask is, how much will how much will it cost until the exit? So the exit for an investor is listing or a trade sale, so selling the company to another industrial partner. So that is the question he will ask. And what will be the return on investment? So I will put 100 million or 110 million euros inside the company. What will be the return on investment? So how much I will be able to evaluate the company when I go for overseas listing or domestic listing, and how will be the evaluation of the company, let's say, if it's sold to a larger player for consolidation, let's say, on the European market. And then, of course, you have just internal growth and additional profitability of the company, which also enables to create value. So really the goal for the investor is to understand how you grow the core value of the company first. So, the people, the management is very important, especially at the early stage. So who is heading the R&D? Who is doing the marketing and sales? What is their background? And then maybe ideally, if you already have a CFO, that's also an important point. So maybe to summarize, what are really the key factors of success for fundraising? What is the investor really looking for? What does the investor like? So ideally, for investors, to simplify, the most suitable companies for equity financing, in fact, are those operating on a predictable kind of market. That means that the market is already there. There are some, let's say 3 to 5 competitors. They already have some 2 or 3 to 5 years existence on the market, and you can predict the market. Second point, if as a company you have some competitive advantages, that is also key, because without these competitive advantages, you will lose market share, and that will be not an interesting story for an investor. They will also, look at details, especially on all the barrier to entry. What are really the barrier to entry you can offer to him? So, for instance, as I mentioned, brand, intellectual property, know-how, also the quality of the team, the experience of the team, that will make the difference. And also whatever proprietary kind of product or services with some patents, that is also key, because it will, of course, protect you from potential additional or new competitors coming in.
Christine, I have a question looking at your presentation. My question is, you are looking at what is a suitable company? Should a company that's looking for investment always be an innovative company? Mm-hmm. Or can any company look for equity financing? Yeah. For example, we have also companies that are IT companies or web developers. Mm-hmm. Are these companies also available for equity financing?
Yeah, it's a very good question, because of course the investors like to have innovative companies, for sure. But what happens, let's say I'm currently working in a company doing some microprocessors. These microprocessors have been validated, let's say, for one business out of the 2. One business is for embedded aerospace. That has been validated by, let's say, a large corporate that buys these microprocessors, but not yet for the second business, which is the most important one, which is cloud computing or data centers. So in fact, that means that this company is really in advance on the market and really has a very innovative product, but not really completely validated by a large corporate like a Microsoft kind of company. So that is always a tricky question, because in fact, who is able to invest in this kind of company? A financial advisor will not be, a financial investor will not be able really to analyze the risk, because that is also a key question. You need to be able to analyze the risk. I mentioned the predictable market, whatever is related to the level of risks. But maybe as in this kind of company, for this kind of company, we favor, let's say, strategic investors, because those will be able to really analyze the risk and say, I'm going to put some cash in this company because I'm sure it will work, because I know this will be they know the market very well, they know the competitive kind of technologies, so they're able to analyze the technical risk. And these are the key investors for these companies.
So you say that not every company should be innovative. For every company in every stage, there would be a suitable investor.
Yeah, I think especially if it's predictable kind of market, and then afterwards I will mention this a bit later, there are some hot sectors, let's say. If you are on a predictable market and on hot sectors, you are more likely to find easily some financial investors. If you are a very innovative kind of company, you can find some financial investors, but maybe sometimes if you are a bit in advance on the market, more strategic partners, let's say corporates. So if I continue my presentation, so I said offering barrier to entry like IP, technology, brands, proprietary kind of products and services. So ideally you should show also historical and forecast with positive returns and profit growth, and possess a culture of cost control. Maybe I can insist on this point because, of course, as a manager, sometimes entrepreneurs like to do some marketing and digital marketing, especially in retail industry, for instance. Of course, this is very interesting, and you can change your decoration of your, let's say, F&B retail restaurant chain and so on. But you need to stick to cost control is very important for the investor. So the profile of the manager, the profile of the entrepreneur needs to be also be cost focused, not just only on business development or creativity or whatever. So, and of course, the business model needs to be cash generative as well. So the qualities the management team needs to demonstrate is very important, very key, really, especially early stage. So ideally experience. Let's say I'm working on a medical equipment company for the moment. Their main competitor, for instance, is GE. Let's say 2 out of the 5 people in the management team are former GE persons, so they know the distribution channel, they know what the customers, the larger customer, are waiting for, and so on. Competence, of course, it's quite obvious, but maybe sometimes not so often. Sometimes in some industries you can find people coming from other industries and thinking maybe it's similar, you have some similarities. It can work, but not always. Motivation, very important. But yeah, most of the cases the entrepreneurs I meet are very motivated. Commitment, also, people need to be committed even after, let's say, 8 to 10 years of R&D. Sometimes you feel maybe commitment is slowing down. The drive as well, they need to think they are still, in the movement to grow the business and, to feel they are on board. Reliability, but that is very important. That's why we explain to our management teams that they need to be very transparent on what they've been doing to create some reliability of the investor. And then vision as well. Most of the CEOs and presidents, we like them to have some vision. Not too much as well, because then afterwards they're too much in advance on the market. But, have still a vision, which is outstanding, an outside vision. I think most of the case, some CEOs of companies, they have a specific vision on what they're doing. And then really a very reliable kind of judgment as well on what's going on with the competition, what will go on the market. So, and then we as investors also need to feel that the team is a real team. That they must support the strategy and operate really as one to make it succeed. And we really quickly can feel, if there are some people struggling because they don't get on well or blah, blah, blah. This can also happen. We really need to feel a team that is operating as one. That is key for the success of the company. So in fact, I always insist, let's say in the corporate presentation, to have really some detailed kind of a resume of each person of the management, because this will speak to the investor. Sometimes he knows some companies the management has been working in and knows the reputation, or he can go back to these companies to call some person, see if they know, this management team and what's their reputation like. So I always insist on, in fact, the resume of each management team. So what are the hot sectors, in fact, that at the moment. So let's say for VC funding, for VC venture capital firms, they are currently looking for startups in the following sector. I mentioned cloud computing, data center is very trendy at the moment. In China, of course, whatever mobile applications in whatever industry, because it's really disruptive at the moment. So it's like healthcare services, they're looking for mobile app, lending, in financial services. So even in these traditional kind of industries, they're looking for mobile applications. E-commerce in China, of course, we have a lot of e-commerce company of, e-commerce of cosmetics, e-commerce of whatever, purchase platforms, whatever. So IT software as well, depending on the industry. And then digital financial services, digital something is very trendy. Then for more later stage companies, private equity firms like to invest in a wider range of sectors, can be those I just mentioned before for venture capital firms. But then afterwards, they also like to invest in retail. It's very trendy at the moment. Healthcare, especially in China, very, very hot sector. Biotechnology is really interesting because we have in Europe, we have an outstanding base of biotech companies, but still in China is a bit early stage. Really to find some expert able to understand what's going on in some biotech companies in Europe, sometimes not so easy. Because we have like 5 years in advance. It's starting in China, but it's still the beginning. Then clean energy, clean tech is also very trendy at the moment, especially in sectors like water treatment or wind power. These are still some industries that the Chinese are looking for. And then we have still some traditional kind of industries like, manufacturing, but it needs to be added value manufacturing. So yeah.
Christine, do you see there is a different trends or industries that were interested a few years ago are now not on the agenda anymore? And do you see upcoming industries?
Yeah, I think especially, let's say, some companies will drop, let's say, if we select our companies, invest securities, let's say some low added value in manufacturing companies. Really sorry, but that will be something we cannot look at it anymore because we know about rising salary, wages, and so on. Second point is also, so as I mentioned, manufacturing companies, and the other one is also export-driven Chinese companies. Maybe we'll also look less to this education of investors.
In the education industry. Yeah, we got a question from somebody about the interest in the education industry in general.
Okay. Also very hot sector, especially in online or mobile applications in education. It's especially, let's say, for language education. We see a lot of business models in this kind of sector. So yeah, education is also strong hot sector. I could add education in the hot sectors. Yeah, definitely. So in fact, investors at different stages focus on different hot sectors. Of course, each fund also sometimes has some sector focus. So we know that this fund is more specific to looking at IT kind of mobile application, whatever. So some funds are also specialized in 2 to 3 sectors. So yeah, that is.
I would like to add one thing about the education industry. Of course, in China, we have the foreign investment law. And regarding education, there are some restrictions in the Chinese legal system. However, I agree with you that it is a very hot sector, but there are some some regulations an investor or an entrepreneur needs to be aware of.
Yeah. Especially, let's say, imagine a foreign investors or European company looking to invest in e-commerce, mobile applications, or education, online education. I think there are some restrictions for them, in some complex legal structure that have been implemented in between, like VIE structure and so on. So, which is of course not so easy for a foreign investor to get in.
Yeah, if people are looking to find investment in their industry, everybody can always ask the Ask the Expert service of the EU SME Centre if for your industry, if there's a specific rules and regulation applying in China.
So what is the role of an advisor like Invest Securities, in fact, for, let's say, if you want to raise funds among VC and PE funds? So we really accompany the companies in the fundraising process, and we start with a feasibility study of the fundraising first. We will let you know if your sector and the size of your company, the industry you are focusing on, the IP you have, the entry barrier you have, is your company really qualified? So we're able, with the track record we have, to tell you if it's feasible or not. Of course, we don't want to waste time. You don't want to waste time. So we really, are quite fast to do the feasibility study, but we still do it. And sometimes we have to say no. Then afterwards, let's say you go through the feasibility study, and we will prepare the material for your company. So we set up a blind teaser, so a teaser that we will going to send to some investors, PE funds or VC funds. We will, of course, discuss together the valuation, set up our research team in Paris. We challenge the business plan and its assumptions. Of course, we cannot really go in front of investors without challenging the business plan, because sometimes business plans are going to hell. So with a very strong growth rates. We prepare also the corporate PowerPoint, which is documentation, with around more than 40 slides. So it's a big work, a big piece of work. And then we train as well the management for investor questions. Then afterwards, depending on the sector, the size, and the growth stage, we are going to contact some investors and ask them the questions, have some Q&A sessions with them, sign the NDA, also the legal part, sign the non-disclosure agreement. Then afterwards, prepare some conference call with you, with the management of the companies, with the investors. Once they agree, let's say they've seen the PowerPoint as well, they are ready to go forward. They want to see, of course, the company and go on site. So they will prepare the site visits. Then afterwards, we coordinate and participate to the negotiation with you on behalf of the company with you, of course, and then until closing the deal. So this is also a big piece of work. And just in the middle of one. So it's very time consuming. And then, of course, if we go for an IPO, we do everything from A to Z, from marketing material until documentation for the regulator, for the stock exchange, for the investors as well, with a market research valuation. And we do also the IPO fundraising, because we are listing sponsor.
I know for a fact for our work in the Benelux Chamber that many investors or entrepreneurs always are scared or have questions about the value of non-disclosure agreements in China. What is your opinion on that?
This is a very good question, in fact, because as a European investment bank, sometimes people say, we're in China, we don't need to sign the NDA and blah, blah, blah. We can go without it and not use it. They will ask a lot of questions. We don't care. The process is a process, and we want to be professional and stay professional wherever we are raising funds. So even in China, if the investor don't want to sign NDAs, we have some that don't want to sign NDA. So we stop there. No NDA, no corporate PowerPoint. They just have the blind teaser. That's it. So I think if they're really interested by the company, based on the blind teaser, they don't know the name, but they know the sector, they know the industry, they know. They will sign the NDA. And the NDA is a standard NDA for everyone. All the investors on one deal will sign the same NDA. So that's it. Then sometimes they have some questions, they will change things and so on. Maybe we will accept, maybe they change the codes, Hong Kong, China, whatever, Europe, blah, blah, blah. But, we stick to the process. They follow the process. If they don't want to follow the process, they are not in the loop. That's all. So we're very strict, and they like it. Most of the investors like it. They like to have a structured kind of approach, and the customers as well.
Yeah, because I understand from the discussions I have with entrepreneurs that they have a very difficult to when they discuss with investors the NDA, and many investors do not want to sign this. But I think for an entrepreneur, you need to be in that sense, you need to be strong and make your case.
Exactly. I think whatever the investors, if they are interested, they will sign the NDA. So just keep on battling, and that's it. So let's go through some examples. Maybe let's say we can go for a first example for a microprocessor company with application in embedded aerospace and data centers. Then I have a second example for a paper and packing company. And then the last company, which is an IPO for a wind power company with 5 million euros of fundraising. So different kind of examples. If you have some other examples you want to submit to me, you can submit it to me, and then I can answer directly now after the examples I just prepared for you. So microprocessor industry. So what I mentioned again is data center, cloud computing. These are really trendy and hot, is part of the hot sectors. Again, the management is very experienced, coming from the industry leaders. So it is really reassuring the investors. They already raised 2 rounds of investments, Series A and B, and that is the Series C investment round that's submitting to us. They already have done a lot of R&D, so the product is already validated on one business and not on the second one. It has been founded in 2008, and the product was launched in 2013. So here again, we are on typically European company. You don't find these ones so much in China, but between the foundation 2008 and the launch of the product, so 5 years to set up the product. So it's R&D phase. Then afterwards, you have a phase for market acceptance, which is also, let's say, 3 to 5 years again. And then you have business development. But again, it's still a long process. Sometimes even Chinese investors have some difficulties to understand it. We don't copy products. So we are just really setting up new products, and innovation takes time. R&D, and then, market acceptance as well. So yeah, it takes time. So the company is not yet broke even, and they're looking for strategic and financial investors in Europe, in US, and also in Asia. So again, we prepare all the marketing material with a teaser, the PowerPoint. We challenge the assumption. We ensure that everything is consistent between the history of the company, the R&D phase, what they're telling, the business plan, and where they're going. And especially on this kind of industries, which are quite high tech, we also try to facilitate the understanding for someone outside the company, because most of the case, these kind of companies are headed by, let's say, engineers with a lot of acronyms and so on. So we explain to them, that any investors, just catching up on an industry needs to be able to understand what's going on in the corporate presentation. So sometimes it's also a challenge. Sometimes even some companies I meet, they have their own jargon, and they just stick to their own internal jargon. It's not even market jargon, it's really their internal jargon. So it's sometimes quite interesting and challenging. Yeah. So second company is a Chinese company in paper and packing industry. There is also a typically Chinese industry, so a China story with, paper recycling coming from Europe. Let's take cardboard. So it's quite funny to see some cardboard with Dutch on the cardboard in the south of China, recycling there, and then transforming this recycled cardboard into some other cardboard for the food industry. So it's typically a second generation kind of company, family-owned company, and they wanted to raise 15 million euros, so which is a realistic amount versus the investment project. Half was in shares, the other one was in convertible bonds, also something that the investors like, especially when the profile is a bit risky. The size of the company is quite big, around 800 million RMB with 15% net profit. And these are, we're looking for pre-IPO investors, so it's like a private placement. So we have done our own due diligence. We go on site, meet the management, we meet the CFO, meet the sales and marketing guy, have some Q&A sessions where we, European standard Q&A session to be sure that the information is of quality, is reliable, accurate, and that's important for us. So we help the investors to understand the company by preparing all the material, and then we coordinate all the financial, audit, legal, and business aspects. And then we negotiate the terms and close the deal until we raise the 50 million euros. Any question? No? Okay. Third example is on clean tech, on wind power company. So it's also a hot sector with clean energy. Again, this was a really experienced international management team with Chinese, Singaporean, also some Indian in the production side. So they went listed in Europe to gain visibility and expand their business there, because we know that, of course, for solar panel, wind power, a lot of business is also done in Europe. They wanted to integrate, in fact, the value chain upstream, and they want to raise funds for that. So we are preparing the PowerPoint, the teaser, market research, the offering circular and the prospectus for the regulator, for the stock exchange. The research team inside Invest Securities prepared the valuation memo, of course, validated by the management. And so we ensure that the information given to the investors, individual investors or also institutional investors, are accurate, correct, non-misleading. We do 5 days business due diligence on site. That is really, for me, the most exciting part when doing the preparation for an IPO. Then we file with Euronext, and then we coordinate with the regulator, with Euroclear, with the communication agency. Then we go for the listing. So it's a really long process. It will last between 5 to 6 months. It's a big piece of work, but it's really exciting, and you're really close to the management team to prepare all the material, coordinate the whole process, and to understand also what's going on inside the company, what's the strategy like for the next 3 years, who is doing what, who are, what are the key components inside the company. So it's a very interesting job. Yeah. So I think maybe we arrive nearly at the conclusion of my presentation. So what are really the solutions, let's say, to facilitate access to finance for SMEs? Of course, maybe banks should resume their normal role, really, of providing liquidity and supporting investment in real economy. Sometimes maybe with some government push, but that is maybe to be discussed. This, in fact, in the goal to share the risk, especially for early stage companies. But I think we can also look at maybe what's happening in the US, in Silicon Valley. So besides bank loans, SMEs should also study maybe some equity financing options. Depends, of course, on the development stage and their industry. But I think this is also an option you need to look at, especially when banks are not really willing to finance your business model. So something else. So I'm now available for any question you may have or case you want to pop up. So I can answer some questions directly.
I would like to raise a question. I think there are many different ways to find financing, and one of the things that I think is currently very hot and interesting is crowdfunding. How do you see crowdfunding currently for SMEs to finance their operations?
Mm-hmm. Yeah, I think crowdfunding is very trendy at the moment. I think this could potentially replace, let's say, the business angels and friends and family investors at the seed stage or the early stage phase. But because I say this because, of course, if you, let's say, ask some crowdfunding platforms to help you to raise funds at a later stage, it's difficult to handle, let's say, 50 or 80 new investors coming in. What do you do when you go for the IPO, for instance? What's going on during, for your corporate governance? You have like 80 investors, small investors being, your shareholders. Very complicated to handle. I don't know, in fact, how you handle this at a later stage. So to start with, I think to replace friends and family, this could be a good solution. And then after, of course, it could be equity financing or debt financing. I think maybe ideally, if you can choose between both, I will privilege debt financing, so that it will be able to reimburse your crowdfunding investors more easily than equity financing, definitely. So it can be a good option to start the business and to finance your business model with debt more than equity.
Okay. Thank you very much for this this explanation of crowdfunding as another option. I looked at during your presentation. I see that a lot of companies need to do a lot of different things and need to prepare a lot of documents. Where do you see that a lot of either startups or SMEs in early stage or later stage find most of the issues to provide this documentation? What do they find most difficult?
That's a very good question. I think maybe especially for early stage companies, it's really interesting because some of them, let's say very early stage, I can say for European companies, not so much a case, but let's say for Chinese companies, they are quite opportunistic, especially in early stage. They're trying several kind of businesses, several kind of approaches, so they don't know where they want to go. They will see, on the ground, especially on fast growing markets, which activity will go faster, develop faster than others. So sometimes some Chinese early stage companies could be very opportunistic and start doing a lot of activities at the same time, see the one which develop more faster than the other one. For European companies, early stage, they struggle sometimes to set up, to have a common strategy. When you are a team with, let's say 2 founders, 2 or 3 founders, the goal is to have a common view on what you're going to do in the next 3 to 5 years. Sometimes this could be a challenge. Could be a challenge sometimes. So that is maybe the sort of challenge I can see on some early stage companies. Later stage companies, so they are more, at ease with setting up a business plan. They know where they want to go. They already have some track record, so they have a better vision on what they want to do. So the challenge is more to see if they go for a listing or not, if they want to be visible or not, if they want to stay private or not, and if you come in with some new investors, do you want to give the majority or not? When because if you give the majority to outside investors, you need to give some feedback as well on the monthly revenues, on the reports, and so on. So you're creating some new constraints.
Yeah, because many SMEs are always family-owned companies, and maybe many of these companies find it difficult to sell part of their companies to outside investors. Do you see that to be a big issue when?
Yeah, it's a very good question, because in fact the customers of Invest Securities are small and medium-sized companies, and of course a lot of family-owned companies. So you have 2 different kind of issues. First of all, generation change issues, because of course the dad has some vision on the company, and then the son or the child has a different opinion, or even maybe he's not so much qualified as sometimes as well, not so much qualified to take on the company. So we can see sometimes some disasters here. Maybe the father or the last generation feels that maybe things will go wrong or whatever, but sometimes they're not very lucid on what can go on with the second generation. So sometimes people will go for listing, let's say, or someone to stay, private and keep things really between the family members. So that's quite interesting. Then afterwards we can have some, of course, a lot of between brothers and sisters, a lot of fighting. And we see quite commonly also inside the shareholderships of these family-owned companies. And with, the sons and girls, fighting for some same jobs or whatever, we can see this as well. So we are very familiar, let's say, with this kind of shareholdership of family-owned companies, in fact, and how to handle, the sensitivities of different parties inside these family-owned companies. So, of course, maybe family companies like to stay private because they want to stay, as a family, or they don't want to be too visible, or that is also possible. So we are able to handle all these kind of sensitive aspects.
Okay.
It's a part of our job.
A little bit on a different topic. Do you see certain trends in China that is developing in this industry?
I think, it's quite impressive, because as you know, in China, it's very difficult to get access to loan financing for SMEs. So they need to choose another option. And of course, the option is the CPPVC Fundings. So what is really incredible in China is to see the number of funds that have been created in the last 3 to 5 years. It's really impressive. The number of funds and the size of the funds. So it's really impressive. So a lot of equity financing or semi-equity like convertible bonds financing are really available in China. We really need to look at it, especially if you are in the hot sector industry I mentioned just before. So this is really typically what's going on. I'm currently working on the healthcare industry, and it's really impressive to see how many funds are opening up every week, or just specific dedicated to healthcare. So there are some sectors which are quite hot at the moment, because they go through a deregulation process. That's why, in fact, these funds pop up now. Okay. So especially in hospitals, in healthcare services, whatever, this has a deregulated phenomenon. So that's why these funds have been set up just now. Yeah.
So these Chinese funds, for example, focused on healthcare, also actively go to Europe and find interesting companies that have either investment or innovation. So that's a little bit the trend.
Yeah, in fact, they could go for 2 reasons. In fact, to look at European companies. First of all, some PE funds are eager to know more about some investment opportunities in European companies for portfolio companies. So that means they don't invest directly into the European company, but they have some portfolio companies looking for targets in Europe to help them find some targets. or they have the ability, or they can also invest outside of Europe. They have the mandate for the USD funds, so they are interested to know more. But most of the case, they don't know, in fact, how to get access to these European targets. So we are definitely very instrumental to find these targets in Europe.
Mhm. And many people always say that doing business in China is different from a cultural perspective, for example. Do you see that the cultural aspect when finding financing in China is part of it, or what's your view on that?
Yeah. It is, of course, China is a very large country, so you meet a lot of different kind of profiles, especially in the PE funds. Let's say you have the profiles I can define, like Chinese Americans that coming back from the US and coming back to China to set up a PE fund. They all have education in the best Ivy university in the US, and then they set up the funds, PE funds or VC funds in China. This population is really interesting for me because we have the same way of working. And they're very, very fast, very professional, and we get on very well because they see a foreigner, let's say in China, like they were, Chinese in the US. So we work very closely together. Then we have also some, let's say, some really RMB funds, really Chinese funds. They're starting to open up. Maybe it depends on the generation, but maybe it's a generation of the 80s, 70s, and then it's easy to work with. Then afterwards, if people are a bit older, it's more complicated. But yeah, these PE funds, Chinese PE funds, are also looking for targets in Europe. They have sometimes some difficulties to find how to go, who can help them. But I think there again, we can be instrumental to find some target for them, and they're looking at it as well. Innovative companies.
Do you think that, of course, when you are looking for financing, you want the company to like you, but do you think it's also from an SME point of view important that you like the investor? Because you need to work with both sides. So if you're not happy with the investor in front of you, do you think it's important that you say, right, I don't think that this investor fits my company?
Mm-hmm. Yeah, that's a very good question, in fact, very sensitive question. In fact, as an investment bank, we are mandated by a client, which is the entrepreneur, and we really serve the interest of the management team. We don't serve the interest of the investors, so we really want to protect the value of the company, the value of the entrepreneur, the value of what the entrepreneurs have set up. The R&D, they have played a very important role to develop the company, and we want to respect this value and serve the entrepreneurs. So we can see some investors, jumping into the company, do some site visits with some strange behavior. We definitely will help as well, some companies to get out of it. We see a lot of different kind of behaviors. Yeah.
Okay.
But of course, credibility is very important. Credibility between of course, Invest Securities as a financial advisor, and the investor is very important, especially in China, I must say. If we come with European companies, for instance, we are always interviewed directly by the investors, asking us on a private basis what we really think about the company, what is our feeling, what do we think. If, of course, they also want to know, because they are not alone looking for some targets sometimes. If they're doing the data, all the due diligence, go to the data room, they will also be able to be credible and do a proposal and be accepted. So they will ask this kind of question to us. So we really play an important role, in fact. And the company also understand we need to play this role to help them as well to have access to the investors and gain credibility, especially if we go through a pre-IPO round, let's say, with the listing afterwards. Because the Chinese investors like to have like a pre-IPO round, and then maybe 1 year later or 18 months later we go for a listing. So that's what things they like. But of course, they need the credibility of a listing sponsor behind them to be sure that the company will one day be listed. Mm-hmm. And how can we assure that they get listed and blah blah blah. So we need to reassure the investors on the whole process. Let's say IPO, fundraising, and also IPO tour. Yeah.
Okay. With these last comments, I would like to thank Christine for having the webinar today. with us and sharing her knowledge on financing in China. I would like to thank everybody for participating today. If you have any questions that have not been answered during the session today, I would like to welcome you to our website and to the Ask the Expert service of the EU SME Centre after registration. There you can upload your question and it will be answered. This recording will also be uploaded to the EU SME Centre website, where you can view it again and listen to it. In the end, I would also like to remind you on our next events. We will have a webinar on August 4th on administration and reporting, and there will be a seminar in China. So for our Chinese listeners of today, on September 11th on IT security in China. Information on that will be on the EU SME Centre website. Therefore, I look forward to seeing you either in other webinars or at other events. I want to thank again our speaker of today, Christine, for sharing your information, and thank you for participating and have a nice day. Thank you.
Thank you. Bye-bye.